For more on that Facebook deal and the battle among tech's big names to take the lead in hot areas like cloud computing, I'm joined by M&A lawyer Jim Woolery. He's a partner at Cravath Swaine Moore. Jim, Happy New Year. Good of you to join us.
Happy New Year, John.
Let's start with this developing story on Facebook. Here's a company that is able to do so much without going public yet. One of the reasons why a lot of people expect there to be a lot of tech deals in 2011 is because there are going to be a number of IPOs, and maybe that opens the window. But you were saying that, like Google, when Google went public, or even before it went public, it changed the game, and Facebook to a certain degree is doing the same thing.
Well, it did. I mean, the IPO market has not been robust, as you know, and here's a company that's able to access substantial capital privately. And, you know, it's my view that they're going to wait for the optimal window to go public, and that's not now because valuations and, quite frankly, liquidity in the IPO market isn't strong enough. But this is a pretty substantial transaction for them. It's going to give them capital they need to continue to grow.
And speaking of grow, they plan to potentially use this for acquisitions and the like. So I would imagine that these days, Facebook's not the only one that's just sitting and saying, okay, if the IPO market isn't hot, then we can go and do this. Lawyers, bankers, everybody that makes deals happen, are they relying on a better IPO market to see deals happen, or no? This is not just a Facebook story. This is a lot of company stories.
I think it's a wider story because I think you're going to see M&A continue to take the lead in sort of capital raising transactions, because you've got a perfect storm out there in the marketplace. You got buyers with a lot of cash, which has been obviously written about extensively. Sellers, you know, are reasonably happy with valuations. I mean, valuations have come back a little bit. And you've got, again, private equity, which has been dormant pretty much for a couple years, has really come back strong. And in a certain deal size, call it, you know, up to, say, $5 billion, the private equity folk have financing and they are ready to deal.
So let's put all those stories together. You mentioned a lot of cash. Tech companies have a lot of cash.
Right.
Number one, are they more likely than others to do deals? And number two, you said private equity is ready to go to work. Are private equity deals more likely in old economy businesses than tech, or are they eager to do deals in technology too?
Well, let me take the first part of that. In technology, it's one of the most dynamic sectors of the market. You've either got to invest in R&D, you've either got to build it organically, or you've got to buy it. And quite frankly, I think companies over the last couple of years have not been over-investing in R&D. They need to go out and do strategic deals to do fill-in acquisitions. You've also got a dynamic around cloud computing, where there are new services that are coming online and new demand. And so bigger players are going to go out and buy the assets they need to provide the services that their customers want. And that is a very dynamic, real-time dynamic. And so in order to do that, you got to do deals. And we've got the firepower now to do deals because you got liquidity in the marketplace.
You mentioned cloud computing. I think a lot of people now understand, okay, that's a hot area. Big tech companies can either do it in-house or they can buy somebody else. Do you have comparable hot trends in other sectors outside of technology, where there are a bunch of companies that say, wow, that's a big issue, I got to go out and do a deal? When you look at the landscape for, you know, where mergers are going to be happening in 2011.
Well, I mean, just to be totally macro about it, companies have cut all they can cut. And you've got to drive top-line growth. And how are you going to do it? You've either got to do it through sort of long-term CapEx, and going back to, in the technology space, the R&D we talked about, or you've got to buy it. And you've got the need to drive growth, and you can do it tomorrow by transacting. The R&D pipeline and sort of the CapEx pipeline, that is a longer-term spend, and that's a good thing to do. But a lot of companies have a need now to do strategic transactions, and it's going to be a strategic market. And you're going to see a major uptick in transactions.
Jim, good of you to join us. Happy New Year again. Jim Woolery, a partner with Cravath Swaine Moore, with more on the M&A story for this year.